No, I haven't. Pockets? Right, I need to change my thing. Oh, it's just put, mine just put. What? Oh. Hello, good afternoon, everyone. Just give me a Zoom emoji if you can hear me, or a real life thumbs up. That's fine. Thank you.
Oh, got loads of people. Andrea, Penny, Ian, hey. Thanks everyone for taking some time out of your day for today's Q&A. Really excited to talk about the upcoming funding round, talk about CHIP, and the vision for the future. Got an absolutely star-filled panel today. Thank you to our wonderful CEO, our wonderful COO, and our wonderful lead investor for taking time to come chat to us today.
And chairman, he's chairman as well.
And chairman. I was going to let him drop that bomb on the intro, but here we go. Wait, just one more minute before we get started, I reckon.
I can start. I guess I can just start talking to people, and more people will join us as they come through. I think we're just over 100 participants now.
Yeah, that sounds good.
Chris, we definitely upgraded to the premium Zoom account, right?
We definitely did upgrade to the premium Zoom. Yeah, I guess we can get started. It's 3:30 and we'll let people join as the afternoon goes on. So yeah, thank you everyone for joining today's investor and golden ticket potential investor Q&A. We're really excited to be able to talk to you guys during such an incredibly exciting time at CHIP as well. And I guess we've all seen through the emails and the invites that we've got Simon and Sharon and Richard on the panel today, and I think I'll leave it to those guys to introduce themselves.
Thank you very much. Well, I'll kick things off. As I assume most of you know, I'm Simon. I'm the CEO and founder at CHIP. I'll hand over in a minute to Sharon and Richard just to say a bit about themselves, but a bit about me. I'm a serial mobile technology entrepreneur. And 4 years ago now, I sold my last business and was looking for something to do. Kind of realized that despite having a bit of money and despite having a relatively good income at the time, I was absolutely awful at saving. So set out to try and solve that problem. Here we are 4 years later with CHIP, and excited today to tell you a lot more about the business and what we've been up to. But I guess, Sharon, do you want to just introduce yourself and then we'll carry on?
Hi, good afternoon, everyone. Lovely to virtually meet and see you all today, so it's fantastic to see. Just a little bit about myself. I joined CHIP just over a year ago. I've spent probably the vast majority of my career in sort of corporate financial services, be it with Barclays or G Capital or LeasePlan, so in the lending side. So, but in more recent years, in the last 4 to 5 years, in the more fintech space. Spent a little bit of time with Deposit Solutions, a German unicorn in the deposit space before joining CHIP. So yeah, very excited to join you all today to answer any of your questions.
Good stuff. So I think just before we get cracking, I know a number of people have sent questions to Chris in advance, and she'll talk us through the if you will, the rules and the housekeeping in a second. But just to say a little bit about what this is all about. So this is an opportunity for existing investors and prospective investors in the company to pretty much ask us any questions about the business, about what we've achieved so far, what our strategy is going forward, and why we're so confident we're going to be amongst the great fintech unicorns in London and here in the UK, and also about the investment round itself, the details of it, what it means to be an investor, and some of the technicalities around the convertible element of it as well. A quick summary about where we are. As I said before, started this three and a half years ago. Set out to build a product that made it very easy for people to save, and then when they'd been able to save money, make it seamless for them to deposit that money in the best possible return. It became quite apparent to me that Nationwide Building Society weren't really offering me very good returns with their sort of 0.2% easy access account that I had in the app, and I was pretty awful at putting money away. So from that, CHIP was born, and we've got this open banking powered algorithm that basically plugs into your income account, whoever you bank with, analyzes your transactions, analyzes your spending, and then every couple of days sweeps an amount of money into CHIP. Then inside CHIP, you obviously can create goals, have different pots, and have sort of nudges and various different behavioral things like saving streaks and stuff to encourage you to save more and achieve particular financial goals. We have now over 250,000 savers. We've enabled people to save over 165 million pounds. We're growing pretty strongly, but the last sort of 7 or 8 months has been an incredible time for us because frankly, because our algorithms pick up when people spend less and enables them to save more. We've seen over 100% growth in our deposits since earlier this year. At a time, frankly, where people have been out spending less, we've been able to pick that money up and enable them to save it. And we've also seen just a general, I think, increase in people's consciousness of their finances, financial security, and more of an awareness around that. And the consequence of that for us has been fantastic. Really, it's really validated what we're doing. As we put out in some of the information over the last couple of days, we've already exceeded our 2020 growth goals. We did that by some point in mid-August. So despite a lot of turmoil in the economy as a whole and in the environment as a whole, it's been a very strong year for us. And we are now in a position where we're going to raise our biggest investment round to date, our biggest capital raise to date. It's going to enable us to really propel the business forward. Not only release a whole new suite of products and features, moving a little bit more onto investment accounts with the launch of our premium account, ChipX, as well, but also enable us to really scale up the team, increase our engineering, our product and engineering hiring, increase our capability, and really position us to be able to take on the opportunity in front of us. And the opportunity, broadly speaking, the way I think about it is that there is not yet a product out there that is built for the mobile generation. It's mobile first. It enables, there's over 200 million people in Europe running around, income earners with mobile phones, and enabling those people to seamlessly, easily save up money, place it in the most appropriate asset class for them, receive the best possible returns, and do that as easily as they do order a taxi or order a takeaway these days. And I think that's the opportunity for us. That's what we're excited to share with you all. Krish, is that a good enough intro, or would you like me to say a bit more?
I'll give you a 10 out of 10 for that one, Simon. Thank you very much. And as for saying more, I guess that's what the Q&A is for. We'll get people to ask questions and see what people would like to know more about, which leads me very smoothly into laying the ground rules for the Q&A. So the way that this normally works, and I'll intro it to anyone who hasn't been to a Chip Zoom Q&A before, is that you guys, the participants, it'd be amazing if you could remain muted throughout the duration of this Zoom call, just to make sure we can keep things as streamlined and useful for everyone as possible. This is also because we will be recording this Zoom call and putting it into a YouTube video afterwards for anyone who might miss a bit of discussion, or for anyone who wasn't able to join the Zoom call today. We'll be putting the content out there so nothing gets lost. What you can do is you can use the chat function to send me questions directly, or just send them generally in the chat function. We'll try to pick up some questions from there. We'll also have members of the Chip team answering questions in there. A number of you have sent me a lot of really detailed emails asking questions, and what I've done prior to this Zoom call is collated some of those questions and tried to pick out the ones that people seem to be asking the most often, so we can work through those questions as well. Yeah, that's pretty much it.
They're coming in thick and fast already, Krish. They're coming in thick and fast.
All right, well, here we go. We love an active Zoom chat. I think before we get started on the questions, it'd be ace if our chairman and lead investor, Richard Frank, would be able to just say a quick hello and intro himself, and then everyone will know who to direct.
Sorry, I forgot him before. I missed him out, didn't I?
Okay, I would never.
Hi, everybody. I'm Richard Frank. Excuse the background. I found myself a little bit late, so I jumped into the park. So I'm sorry if there's a load of background wind noise, but I'll be muted as Chris said I should be. So happy to answer any questions that anyone would like, and delighted to see you all here today.
Thank you, Richard. Just winning with that beautiful background whilst we're all stuck inside. I see it as a plus. Right, let's get stuck into questions then. I think the main question that's come through, and I think a prudent one to start the Q&A with, is maybe if Simon, could you give a brief overview of how this round actually works and why it's different from other rounds we've done, and also why we're doing it now?
Yep, absolutely. So in short, we've raised about £12.5 million in equity investment to date. That's been in various different increments over the last couple of years. As I said, this last 8 months or so, we've really accelerated growth, and it's kind of put us in a position where we can raise significantly larger round. The number, broadly speaking, is about £30 million that we're going to be raising. And we've decided to break that into two tranches, two parts. The first part being a £10 million convertible investment, and the second part, £20 million an equity priced investment. The reason we've done that is there's an initiative or a program put on by the British Business Bank called the Future Fund, where they're enabling companies like us who raise using this convertible mechanism to have the funding matched up to £5 million. So it seemed like a bit of a no-brainer for us to do that first. So because over the last couple of years, we have always invited our customers and members of our community to come and invest in the company, it kind of seemed like a good way to fit this together. The only catch being that we have to have this part of it closed before the end of September, as per the terms of the Future Fund. So the 10 million, as I said, it would be 5 million from individual investors, 5 million being matched by the Future Fund, and it is convertible. Now, what that means in really, I guess, simple terms, the way I think about it is somebody participating in the round invests their money now, they invest their money up front, and then what happens is that investment actually converts to shares at a later date, at the issue of the second part of the investment, but at a share price which is discounted, at least 20% discounted from the second part. And that's a mechanism called convertible loan agreements, convertible loan notes, that VCs often use to, I guess, reward or incentivize investors taking part slightly earlier in the round. And that fundamentally is what we're doing. Perhaps I can see there's some questions coming in now. Is it maybe best I just address these in relation to the raise? Is that right with you, Krish?
That sounds good.
Yep. Okay. So there's this 8% coupon. So one of the conditions of the deal is before the investment converts to shares, it earns an 8% interest, an 8% coupon. That is a term that has been negotiated or put in by the British Business Bank, and everybody participating in the round gets that. At the point of conversion, so when the investment converts to shares, you can choose to take that in cash if you've invested. You can take the 8% in cash if you've invested an amount greater than £1,000, or you can choose to actually convert that coupon, that interest, into shares, and that will be the individual's choice for doing so. Just to flag, the British Business Bank, the Future Fund will convert to shares at that point. I saw somebody else ask that below. There's something that hasn't been mentioned here is just about A shares and B shares, but I'll address it now. So we have two different share classes in the company, A's and B's. They both rank exactly the same in terms of ownership, but the only difference is A shares have voting rights and they have preemption rights, which means in future fundraising rounds, anyone with A shares will be able to invest at the same terms of a new investor coming in, sort of pari passu to that. Again, the terms of the British Business Bank deal that we have is that this convertible round is for A shares, and therefore anyone participating in this round, irrespective of how much you invest, the investment does convert to A shares. There are no B shares on offer.
Thanks, Simon. And just to follow up on that, we have posted quite a lot of content, just like explaining the round in detail, looking into definitions when it comes to bits about this round on our YouTube channel and on our blog. Yep. please check that out as well, just in case you've missed anything here, because we've posted some detail.
They did. They stuck me in front of the camera last week and tried to get me to do these slightly cringe explanations. I see. Damien Adams just asked, do we anticipate the VCs in the next equity round subscribing for preference shares, or does the convertible convert into preference shares? Again, the terms of the convertible are whatever what they call the highest share class, basically the best, whatever the terms are of the follow-on amount, anyone in that convertible converts on the same, for the same share class. So everyone in this, irrespective of whether you are a VC, whether you are the future fund, or whether you are an individual, will have the same share class. So I think sort of compared to some of the crowdfunding we've done in the past, it's particularly interesting opportunity. I know we've had quite a bit of feedback about that it's really quite exciting for people to be able to get the A shares who perhaps in the past haven't been able to afford the threshold to do so.
So we've had a little bit about the hows when it comes to the investment round. We've actually had a few questions just coming into my DMs, which have also been asked quite a lot as well, more on the why. So Rodrigo Maria says, the space is already too crowded. What can you say really sets Chip apart from its top competitors?
Okay, very briefly, top line, I kind of break it down. The way I see it is you have digital wealth managers, companies like Nutmeg that are a bit more tech focused. You've got much bigger ones like Hargreaves Lansdown and AJ Bell and so on as well. They are focused on what we kind of call the mass affluent people that have some accumulated wealth, accumulated savings, and they provide a platform for them to manage that wealth. All the way down on the other side, we have tools. There are other companies, I won't mention their name, that do sort of roundups and micro investing, which is kind of hobbyist. You've also got other products as well for people to kind of a hobbyist active share trading and stuff like that. But I see an enormous gap for the mass market consumer, normal people who perhaps don't have large accumulated amounts of wealth. They're not served very well by these robo-advisors, by digital asset managers. They're looking for a digital savings account, right? Something that will basically enable them to start by saving up for their holiday, save up for Christmas, save up for their flat deposit, save up for, I don't know, a car purchase, and kind of build out from there, and then actually perhaps move some of that into investment funds, and sort of start at a much, if you will, lower end, mass market part of the market. And that opportunity is that area of the market is so underserved. And that's what I see as our opportunity. And frankly, I don't see anyone else addressing that with the same level of aggression and dedication that we are.
Simon, I'm just going to jump in here. It's Richard again, and say that I agree with your last comment more than everything else. I think we're the only company in the marketplace which actually helps people and teaches them to save. And rather than getting involved in saving so that we can invest their money, we see our job as helping people to save, helping people to put money away. And then a later lesson that we'll teach them is how to invest that money. Whereas most of our competitors are only interested in the investment and only interested in taking customers on if they're able to pay a monthly fee into an investment account which can then be invested. So I think there is no one else out there at the moment like us, and that's what sets us apart from those people. But it is very difficult to see that difference unless you look very carefully.
Yeah, absolutely. There's another couple of questions come up on the detail of the round, but is there any other questions or relating on this on competitive landscape first? Perhaps we should do that rather than jump about.
Did have a question come into me, which was from Richard Dougal, which was, what products do we plan to launch in 2020/2021 to expand Chip? And I suppose that might go well with why are we different?
Yeah, Sharon, you haven't said anything yet. Why don't you take this one?
Might regret saying that. Okay, so in terms of future products, I think it's probably sort of 3 or 4 pronged attack we're doing on this. So we obviously want to be offering our market leading rates and returns. So we're going to continue to make sure that they are available and accessing as much banking capacity as we can to provide those. And we're working on some imminent things that are coming in the next few weeks on that space. It's very, very exciting. And what that's doing is for customers who have got a pot of money and have saved and achieved some goals and want to gain even further interest on those, great. That's the direction we want to be able to give access to. On a similar vein, in the future, what we're looking to do, and this is where this round is so exciting for us, is we want to be able to give customers access to investments. So when we're talking about funds, and if they want to take some risk, depending on their risk appetite, offer a series of funds that could give them even greater returns on that. And I think separate to that even more is looking at sort of ancillary products that may be coupled with what you've saved for. You're looking for insurance. So why don't we put the two together? So I think there's a whole remit of products we're looking to offer, but there's also features that we're looking to do on top of that. So as a business, we want to be able to be that seamless access to save your money and then put it in the best place for the best return for you, depending on your risk profile. So I think we are making sure we can keep enhancing our auto saves, keep enhancing our goals features, all of these things that our 250,000 customers have loved so far, but then giving them some real upside on the other side of having achieved some of that and being able to get the best return. So investments, insurance, other products as well that we can see affiliations with. There's an awful lot out there. And this is what this round really means to us. It's giving us that real kicker into those spaces.
Thanks, Sharon. That was great. And just another question that has come in, which I think you would be very suited to answer as well, which is what's stopping big banks like HSBC or Barclays from offering a very similar product to what Chip is hoping to offer in the next couple of months?
I think firstly, it's probably a bit naive of us to think that they won't do something. I think they are, we've all got our own retail bank apps and they all constantly have additional little features or telling you how much I've spent on lattes in a week, etc. And some of them have quite, mature features as well. But I think having worked in banking in that world for about 20 years, I think and many of you on this call might also be from that space, big banks don't work quickly. They have layers of bureaucracy and layers of legacy tech that we simply don't have, which is a good thing for us. We can get things to market in days and weeks, which the equivalent will take them weeks, years, months to do. And actually it's not part of their core proposition. That is not what they are there to do. We are there to serve our 250,000 customers and more, and we want to be able to scale what we can deliver to them quickly. I think if you look at a couple of examples, the entire fintech industry, a huge part of that is there because banks can't react quickly enough. And I don't think that's going to suddenly change overnight. So I think we've certainly got an advantage there. And secondly, even when the big banks and the other financial big institutions do things, the RBS example of building that millennial digital bank bow is a perfect example of they still can't do it. They spend huge amounts of money. And actually, we can be nimble, we can be quick, we can react to our customer community forums that are saying, we'd love to see this. Well, you know what? We will do that. And we'll try it and fix it and change it. And I think that's where we have a huge advantage. But I think we shouldn't also be naive to the fact that they can also do some of this stuff as well, just not part of their core proposition.
Yeah, and I'd add to that and say that the value proposition here fundamentally is using open banking, saying to the customer, listen, it doesn't matter who you bank with, who your income account is. We use open banking, we'll connect on top, and we will democratize that access to best in market, whatever it might be, whether it's for cash deposits, whether it's for investments, as you said, Sharon, insurance. It shouldn't matter who you bank with. And by very definition, a bank that's a particular provider for one of those things can't do that. So it's about breaking out that access.
If I can just add that I think classically the big high street banks and the institutional banks generally tend to watch a marketplace once they feel it's matured, pick the leader in that marketplace and buy it, rather than start a business and try and create a marketplace, because that goes so against everything that they're set up to do. It's so difficult, as Sharon said, for them to trade their way through a startup operation. So they either throw an enormous amount of money, an example Sharon gave us, where it hasn't gone right and they've had to shut it down, or otherwise the smarter move always seems to be big organizations look for leaders in marketplaces and buy them if they think that that's a market that they need to participate in.
Yeah, now the next question is going to be, when are we selling to RBS?
Well, that's a question that can be asked. Who knows the answer to that one?
We have had a very seamless conversation, question in chat as well. We've spoken a lot about the growth of the actual app. Sharon, is there any chance you could talk about the growth of the team as well, what we've seen in the last 6 months, and where we're heading team-wise in the next 6 months?
Yeah, so the team is now, so Chip as a business is now around 70 people, and it's been interesting through the COVID space. We're all distributed all over the place as well. It's quite an international team. We didn't quite realize just how international at times. I think the key things I've noticed, certainly since last Christmas, is in terms of the growth that we've done in the people and the scaling of the business has been in our engineering function. We now have multiple squads that work on specific feature sets and product sets. And that's certainly helped with scaling the enterprise, and we've re-platformed the tech as well. So we're now moved away from the old platform that we were on onto a new, more scalable one, which is much better as we look forward to growing our customer base even more and more to make that sustainable and resilient. So the engineering function has certainly seen the biggest part of our growth. But in addition to that, we've brought in experts in financial operations as well, as we bring in these new products that have more intricate banking mechanisms and payment mechanisms behind them. We've got obligations to you as our customer, but also to the regulators that we are now authorized by, to make sure that everything we do is watertight. So we need to make sure we have the right experts in the business to ensure that happens. So I think it's in multiple parts. And I think even in the fun world of marketing, they've grown because we've built so many marketing partnerships. We reach out to as many different distribution mechanisms as we can. And some of in the social media space, some are in the business space and the brand and PR space. That team has grown as well. So there's lots of different places we've grown, but I think predominantly in the engineering space is the real area we've bolstered.
Yeah, it seems a good time actually just to jump in. I've seen someone's written in the Zoom chat. Just to repeat the question, you say you're quick to market, but there have been many cases of defects or changes that have taken months to fix previously. Are you maybe overselling the agile methodology? And is that the exit strategy, then become a market leader, sell to a big bank? So the three questions there. Look, fundamentally, the benefit of having a team of this size should be the agility, the ability to move quickly. The reality is we are often constrained by the engineering resource that we have. And in a team of 70 odd people, having 30, 35 people within the engineering team, although it sounds like a lot, at times actually is very few people, and we have to make really difficult choices. We have had in the past to make difficult choices about where we put that engineering resource. And I know certainly at some of the earlier stages, when we've had people in our investor community and in the Chipmunk community, been very active in their involvement in the company, and they've had a lot of patience with us, frankly, where they've had to wait quite a bit of time for things to be rectified. And the way we resolve that is we scale the engineering team, we scale our engineering capability, we bring in best-in-class engineers, not just in terms of volume, but actually in terms of skill. We make sure that we're building a technology platform, we're building a product that is suitable for acquisition by a bigger financial services company, that is something that actually is better than what's there with the incumbents. And to kind of combine that with another question that I've seen asked there, that is why businesses like Chip, are particularly capital intensive at the beginning. That's why it's so important to raise so much capital, scale the capability, scale the platform, scale the customers as well. But that's how you're creating the value for acquisition. I think the value that the value that a big financial services company could see in that is far, far, far greater than the amount of capital that will be invested and deployed to do that.
Thanks, Simon.
Sorry, I did. Yeah, just thought I'd jump in on that because it was there while we were.
No, that's good. And a lot of other questions which have come into the chat to everyone and privately, basically around VC. So could you give us an update on that and kind of where that fits in?
Yeah, maybe I will just sort of re-summarize a recap on what I said earlier in the call, because I noticed there's now about an additional 100 people or so that might have missed it at the beginning. What we're doing with this round is, as on the back of the growth that we've had this year, and on looking forward with the opportunity we have in front of us, we want to raise about £30 million in total. We think that's the suitable number for where we are. We've decided to break that into a £20 million priced equity round and a £10 million convertible debt round. The convertible debt round is what we're offering the crowd, our existing investors, chip savers, and potentially some Crowdcube investors as well to participate in. That's going to be matched 50-50 by the British Business Bank. And the terms of that are, as I said, it's a convertible loan. What happens is you make the investment now, you earn an 8% interest on the money whilst it's before it converts to shares. And then what happens is when there's the second part of the investment, the £20 million equity round, the money invested in the convertible converts to shares at least a 20% discount, at least at a share price 20% cheaper than the follow-up VC round. That's why we're doing it like that. And we think that, frankly, it maximizes the capital that we can raise and also gives the opportunity to our customers to invest on the same terms as the institutions. Should I just do a quick fire round of some of the stuff coming in here? What is the stage of the follow-up round? That's been in discussions for the best part of the last 3-4 months. It's not, it's not closed yet, and we have to be clear that anyone investing at this time, the second part of it, we don't know exactly what the price is going to be. We don't know the exact amount that it's going to be, but we have made some broad assumptions. For those of you who are looking at the investor calculator that we distributed, that gave a couple of scenarios for people to look at. I think that there was some press last week in Business Insider that mentioned a few numbers, but I have to emphasize it's not confirmed, and we'll have to see sort of how that evolves in the next couple of months. I can't really say much more than that. But in relation to the convertible element, as I said, it's a minimum 20% discount, pays an 8% coupon, and we're offering up to £5 million to the crowd. Is there going to be EIS? No, there's not going to be EIS relief available on the convertible round. By its nature, EIS relief is a tax relief that's available for equity investments. Because this is a convertible, it's just not available in this round. I should probably caveat that with you should seek your own tax advice. And the other points are RBS can't afford us. I suppose that's not really a question. Will the forthcoming £20 million equity raise be EIS? It's unlikely that there will be crowd. There probably won't be crowd participation in the follow-up. So if you're a crowd investor, you should invest in this part. On the assumption it won't be there for the follow-up. How much of the funding response to the current market versus how much of the funding requirement is in response to the current market versus part of CHIP's original growth strategy? Very simply, the growth strategy has remained the same for the best part of the last 2 years. I think once we got clarity and understood where we could create the value, what COVID and what's happened in the last 9 months has done is demonstrated the need for us to accelerate that. The opportunity is in front of us now. We need to capture that and bring forward those plans to raise more capital, frankly, to be more aggressive.
I think I'm going to jump in now because otherwise my beautiful transition to my next question. It's not going to be relevant, but we spoke a lot about larger investors, and surprise, we have a larger investor with us. Richard, do you reckon you could talk a little bit about why you decided to back Chip?
I'd be delighted to. I mean, I think the reasons change all the time, and every day I think of another reason why I would back Chip. But at the time, the thing that captured my imagination was the basis of the business is to provide people with the ability or help to save. And there's no question that's something been borne out over the last 6 months, which is absolutely key for every single one of us. At whatever level it is that we're earning money or not earning money, we know that we need to save for whether it be nice things that we want to buy for ourselves, holidays, or whether it's for a house or an apartment that we want to buy or rent, or just for our retirement and for our future. And saving is something that's been ignored in this country. So when Simon came to me with an idea for a business that was championing the idea of helping people save, it seemed to me very simply a no-brainer. I've always been very impressed with Simon, but I'm even more impressed with the people that he's subsequently brought on. So I talk about reasons that I feel happy that I've made that investment subsequently. I'm very lucky. I get to spend a lot of time with the management team of the business, and every business has people that are great, but what I think sets the team aside is they are all single-minded about trying to achieve success for the business, and success for the people that work inside the business. So from my perspective, this business is ticking an enormous number of boxes for me. I've seen fantastic growth. We have exciting issues constantly as to how we can deal with our growth, how we can challenge ourselves, and how we can try and push our business forward. So my original reason was very simple. I just love the idea, and I think it's very important that we all save. So if the business continues to focus its attention on that, I'm going to be happy as long as we have success. Success comes as a result of our customers being satisfied, them recommending people, and us fulfilling our obligations to them. So I'm very happy I've made the investment. I'm very nervous at times, as anyone would be, about the future of any business. You can never be 100% certain. But what I see is circumstances around us really falling into place and framing the business beautifully. So hopefully we'll be able to continue on our current trajectory, and we'll be able to find an institutional backer that will want to get rid of me and all the rest of the shareholders and take the business on to the next level. Until then, it's just a challenge for us all to make sure that we stay focused on our customers and we continue to try and move forward. I don't know if that answers the question, Krish. If it doesn't,
no, it was brilliant.
Please feel free to ask me anything else.
Thanks, Richard. No, that was great. And we all know that I love seamless transition into another question. And you said something that was very good, which was the circumstances around us. Not to bring up the C word, but the global pandemic. Simon, we've had a lot of questions asking about the impact of COVID in the business. And I think we just had another one from Andrew Turvey in the chat about the changes that COVID has presented to the company, and have we benefited from the additional savings that people have made during COVID? Do you think you could touch on that, please?
Yeah, I think it's perhaps slightly distasteful to talk about COVID in positive terms or talk about benefits. But very simply, we've seen over 100% increase in the volume of deposits that people have made into Chip during the period. We've seen an acceleration of organic growth, user growth. And that, in our view, is really down to two things. Number one, as people have been spending less, our algorithms have picked that up and enabled them to save more, bring more money into Chip. But also, I think that there's a focus now, or sort of an increased awareness, let's say, on financial security. And what that means for me and what I should be putting money away for, and kind of creating like a safety net for myself. And compared to, let's say, some of the other fintechs out there that have been focused on lending or focused on spending or enabling people to spend better, CHIP has certainly benefited from people's focus on their finances and on the future of their finances, and building wealth for themselves.
And moving forward from, of course, the circumstances at the current moment, could you talk just a little bit more about the vision for the future, and maybe touch on ChipX and international expansion, because international expansion has been mentioned quite a lot in the chat as well.
Sure. So 2 points there. Our current roadmap at the moment means that in a few weeks coming into October, we're going to be opening out a different account tiers. We're going to have our premium account, ChipX, which has existed in a couple of different forms to date, and we've worked with our community in the past to iron out the things we want to have in there. That now is going to have some seamless access to investment funds, starting off with unit funds. And then we're going to expand that out into a broader range of things. We've got some ethical, social, and governmental focused stuff in there, and really give our customers seamless access to deposit into these funds, into investment funds, just like they would into a savings account in their bank. Then beyond that, we're going to add ISA and LISA wrappers, because that's something that we've had a lot of feedback that's important to our customers, in particular being able to bring in the lifetime ISA. We're also going to be making quite a number of changes to the core account. So without getting too much into the weeds of the detail, but to date we've up until earlier in the year we operated on e-money. We're now making that transition into FSCS eligible accounts, and really, if you will, sort of move away from that e-money infrastructure, enabling people to have seamless access to the best or market leading interest rates, I should say, irrespective of how much they have to deposit. And that should apply for someone who's depositing £50 a month with automatic savings, or somebody that has 10, 20, 30, perhaps even more £1,000 to deposit in as well. That's what the roadmap looks like in the short term. What was the second question? I've forgotten now.
International expansion.
International expansion. The opportunity in front of us, without a doubt, is global. I think we have an immediate opportunity in the UK to reach potentially 5-10 million customers. Coming into Europe, there's an addressable market of over 100 million consumers that kind of fit the profile of the CHIP customer that we see now. But beyond that, it could and should be global. That having all been said, this year or going into 2021, the focus is still very much going to be on the UK. We're at 250,000 savers now, a little bit over that now. That still remains, the tip of the iceberg, and there's a lot more that we can do in the UK before we drive forward internationally. But watch this space.
Brilliant. Thank you very much. Just aware of the time, we've been at it for about 45 minutes now, though time has flown because this has been very fun. But just wanted to make sure that we touch base on a few of the technical questions before we end, to reassure anyone who's been asking these questions in chat. Alex Booth has asked, does further investing convert my previously on B shares into A shares along with the new investment, or is it just the new shares?
No, it doesn't. If you own shares already, those remain what they are. If you invest in a convertible, when they convert at the follow-up round, they will convert into A shares. The amount that you invest now converts into A shares.
Do you think you could follow on with that and just outline some of the differences between A shares and B shares, and what the benefits of A shares are?
Both A shares and B shares rank exactly the same in terms of ownership. So if you own 1% of CHIP as in A shares, or 1% in B shares, exactly the same. And if we were to ever sell the company, if the company was to float, they would rank exactly the same. So I just want to be clear on that. Where they do differ is a holder of an A share has a vote. So, for example, if we were to be acquired, we had to pass a shareholder resolution, we would have to get 75% of voting shareholders to sign that off. And that would be A shares that would be counting. And there's also something else called preemption rights, which basically enables an A shareholder to invest at future rounds on the same terms as incoming investors. So if you were concerned in maintaining stake, or if you want to make sure that you always have the top class of share, you would want to use your preemption rights to do that.
Brilliant, thank you. Oh, someone's not happy with your answer near me. No, that was great, thanks, Simon. Could you also touch on the investment cap? A lot of people have asked whether there's a minimum or maximum to return.
Yeah, minimum investment's £50.
Excuse me. Did you drop that red thing?
Not sure about what happened there. Yeah, minimum investment £50. We wanted to implement a cap of £5,000 for new investors coming in, because we are conscious that £5 million allocation. If we had everybody invest £5,000, that would only be 1,000 people able to participate. So we want to make sure that some of the Crowdcube big hitters don't come in and kind of take up the allocation. But I think there's been some debate on that internally. I'm going to actually defer that question back to you, Krish. I think we're going to make a decision on that tonight, based on some feedback on our forum and on the Facebook groups, and then we'll decide on that going through when we launch the campaign tomorrow. But just to be clear, if you are an A shareholder, obviously existing A shareholder under the preemption rights, you are uncapped, and that's part of your preemption rights. You're allowed to invest however much you like.
Yes, speaking of forum or Facebook groups, some of you might be thinking, guys, what are you talking about? And what we're talking about is our community, our incredibly strong community of over 20,000 people in our Chipmunks Facebook group. And we've got a private forum where all things chip are discovered. There are private investor forums as well, where we talk about what investors would like to see, investor specific questions as well. So please do join all of these forums, because we do a lot of talking behind the scenes. And I think talking about our community and forum, Sharon, can you explain about the general interest rate, which was, by the way, given out to Chipmunks and our investors first, which is a great reason to join the forums, and kind of talking about how we negotiate those market leading rates for our community and how that kind of works.
Yeah, sure. So I think just to re-emphasize, we have the Chipmunks, as we call them, about 15 to 20,000 customers who are part of that. And, the reason we do that actually is to really get the feedback straight away. And we do a lot of testing and putting ideas out and getting people to vote and give us feedback, or even actually pre-COVID, come into the office and meet us and actually talk to us directly about what's working, what do you want to see in the future, and really get under the skin of these things. So just in terms of that group, if you aren't part of that already, I'd really, really recommend joining in with that. But in terms of the way we go to market to get best rates, we use a number of methods to do so. I think part of the method is our scale that we've got to now does get us through the door with banks, and opens that conversation, because you need to have a certain amount of saving potential that they're interested in. I think secondly, we work with brokers who we do a deal with them commercially, that says, okay, you get us that best rate, because we want to pass all of that return directly back to our customers. So, we work with them very closely to go out to the market constantly to look for what is the best option for our customers and how can we give them the best return. I think we do need to be mindful of sustainability of the business. So we need to make sure we can give our customers value, because if, we want to generate revenue through things that we are doing. So we need to make sure that there's value there for our customers to get that. And I think we're seeing that now. And, we've got a lot of other interest-bearing return products in the pipeline. So I think it's certainly going to be a case of watch this space as we grow.
Thanks, Sharon. And we will be discussing all of those tidbits on our forum and on our Facebook. Sorry, did I plug that again? I'm head of community. I don't know what you want from me. I think that would be a great note to kind of wrap up on. We've had an incredibly engaged chat, and we will be saving this Zoom group chat and making sure we put content out which reflects what people are asking. We will also be on the forum and on the Facebook post this Q&A to ask any questions that might pop up, and this video will be posted as well. I think I might hand over to Simon now for some closing remarks on next steps.
Yeah, I just want to emphasize that point. I think someone, Alan said it very well on here. It's really difficult, I guess, to address all of these questions. I hope that I've done good enough job in explaining what we've achieved to date, where we're going, why we're raising this money, why we're using the convertible mechanism. But please do put any more of these questions into the forum, and I and the team will do our absolute best to try and get them answered, particularly the technical ones on the 8% interest. I saw that somebody mentioned it there, that again, just to answer that one, if you invest over £1,000, you'll be able to choose at the point of conversion, do you take the 8% in cash, or do you want to convert it into shares? Things like that. Just ask in the forum and we'll do our best to try and answer them. And I think when the campaign goes live as well on Crowdcube, there'll be a forum there if anyone to ask that kind of stuff. But yeah, generally speaking, it has been a brilliant session. Thank you very much. Appreciate all of you taking an hour out of your afternoon to come and have a chat with us. I hope that you're all excited to join our journey. If you are not an existing investor, if you are an existing investor, well done, especially if you got in right at the early stages. It's fantastic to have all of your support. We really do appreciate it, and it's really exciting times.
Yeah, so, thank you very much, everybody. It's very exciting. So look forward to talking with you all soon.
And thank you to our wonderful panel, Sharon, Simon and Richard, for taking some time out to answer these questions. We will be posting the recording, we'll be saving the chat, and we will be around. So hope everyone has a great day, and we'll see you on the internet.
Thank you.
Bye all.
Thanks, everyone.